Welcome to September's second and final class of the Advisor Ambassador Program for September. My name is Zach Hewells and I work in the Marketing and Communications Department at the NAIFA Home Office. Today we have a great speaker lined up for you, Rick Cordaro. Rick has more than 38 years of experience in the insurance industry and is currently the Disability Income Regional Vice President for Principal Financial Group. Rick has accomplished quite a lot in his career, but most recently in 2018, Rick was awarded the Newell C. Day Agent of the Year Award, which is a big honor, especially in NAIFA, Iowa. Rick is joining us today to share some wisdom about the disability insurance marketplace. And if you have any questions during the program, feel free to use the chat feature in Zoom, or you can ask them at the end of the program directly to Rick by unmuting yourself. Without further ado, Rick Cordaro, welcome.
Well, thank you very much. I appreciate the opportunity to share the message with our friends at NAIFA, and whether you're a new member or a prospective member, part of my life and my career, I attribute a lot of success of my involvement with NAIFA, and I think it's a terrific organization, a great federation to help and grow your business, and really has your back in a lot of things. But let's talk about today's topic, and that's income replacement, and how can you achieve success in this marketplace today. So let's talk about, first of all, where we came from a little bit of a historic, kind of perspective. What it will do is give you what I think, after I show you this next slide, is going to give you an opportunity to see that income replacement, the opportunity in this marketplace is terrific, and there's no better time than today than to start talking about income replacement with your customers. And if you look back, we're looking back maybe 20 years, back to 1990, total sales in the marketplace were at $460 million, with 125 carriers actively participating in the market as far as manufacturing the product, with a workforce population of 126 million people. Now, when I started in the early 80s, that number of carriers was well over 400, and the volume of business was, interestingly, more than the 460 million you're seeing today. But let's move forward to 2015, and total sales were just over 335 million, with the number of carriers on the marketplace reduced down to 20, but yet the workplace population grew to 157 million. So when you look at the opportunity and you see where you are today and in perspective to where we were 20 years ago, this is an underserved market for a lot of reasons. And we think the market opportunity has never been better for you to be engaged in the conversation with your customers regarding income replacement. Number one, it's going to diversify your revenue. There's more interest from customers today than there ever has been. However, there's been a very small amount of market penetration, and there's very few advisors in the risk market today. And I'm going to explain that a little bit later to you on the makeup of the people in our industry and the financial service industry, but it will give you a really good perspective on the opportunity for you to be able to acquire customers in a market that is totally underserved. Okay, why doesn't everybody have income replacement? And the bottom line is this: is that as advisors today, it's not that they don't want it. It's not that they wouldn't find it of interest, and it's not that they don't need it. The fact is that we're not asking our customers the questions that if you became sick or hurt tomorrow and your income was to stop as a result of a sickness or injury, I need to know what your plan is. And that's the simplest way to start this conversation with your customer. Just simply ask, hey, if you got sick or hurt tomorrow and you couldn't work for any period of time, I need to know what your plan is. What are you going to do for you and your family? How are you going to pay your expenses, your mortgage, your car payment, your kids' tuition? How do you plan on doing that? And just kind of be quiet and let the customer tell you what they're going to tell you, which is typically, I don't know. Okay, So this is a really neat visual that I use a lot. It's got the old Principal logo on there, so I've been using it for a long time. But you're going to see there two swimming pools, and these two swimming pools are located in luxury resorts. Call it wherever you want to go, in Cancun or San Diego or Florida or wherever. It doesn't matter. But my question to you would be, what swimming pool would you rather be swimming in? Okay. Now you look on the right, and that's pretty crowded. There's a lot of people in that swimming pool, and probably not really enjoyable. You're not going to be able to really stick out and be different in that pool. But you look on the pool on the left, it's got one of those swim-up bars, pretty tranquil and really beautiful and calm, and not a lot going on in that pool. But what this identifies with is, I want you to look at this, and what happened was, there's a recent study when they went to individuals like you and I, people who are in this financial service industry. Now that covers everybody from banking channels to wirehouses to insurance companies, to everybody that's out there talking about and identifying as a financial advisor. They found that 95% of the individuals in our marketplace identify mostly with the people that are trying to swim in that pool that everyone else is in, and those are individuals who focus a lot of attention and a lot of energy and a lot of expertise in the area of asset accumulation and wealth accumulation, or assets under management. You've heard that term. So that's where 95% of the advisors are today, in that world. It's really hard to pinpoint any one that's different than the other. There's a lot of guys and gals trying to acquire space to be comfortable and be seen and be identified. But now you look at the swimming pool on the left, and this represents 5% of our advisors in the marketplace. Now, these advisors, when asked what you do, they say, hey, I'm in the life insurance business. Now, that includes, what it talks to me about. When somebody says to me, hey, I'm in the life insurance business, that means I'm a risk manager. I help people manage the financial consequence and financial risk associated with living too long, dying too soon, or becoming sick or hurt. Okay, so if you look at that, if you look at that, you got 95% of the people trying to enjoy themselves in a space that's very limited, but you got 5% of these people over here on the left really enjoying the comforts of knowing they're separate. They've separated themselves from everybody else. Now, interestingly enough, when they did a study on these groups, they found that the people on the left, the ones who identified as risk managers, mainly life insurance, disability, and long-term care people, those individuals, surprisingly enough, had more assets under management than the people who are in the right trying to acquire those assets. Number two, the people on the left are making more money than the people on the right. The other thing, too, is that the people on the left have a longer lifespan in our industry than the people on the right. And the people on the left have a longer-term relationship, meaning persistency with their customer, than the people on the right. So let me ask you a question. If you want to make more money, and if you want to separate yourself from everyone else, and you want the probability that your career is going to last much longer, and you're going to have a longer-term relationship with your customers than you do with the people on the right, is there anything bad with what I'm saying? No, I don't think so. You're going to make more money, have deeper, stronger relationships with your customer, and you're probably going to be in this industry a lot longer than most. So that's the visual that I use, and it's very powerful. And so I'm hoping you think in terms of swimming in the pool on the left, okay? But let's talk about marketing income protection. Everyone needs it, but we need to show them why, and it's very important to know this. First of all, and first and foremost, and we really stress this within the industry, not only with Principal, but every other company that we work with. And we're blessed to be in an industry that from top to bottom, left to right, there's not a bad carrier in the marketplace. They're all pretty solid. There's about 28 of them today that are really making a lot of noise in the marketplace. So regardless of the carrier you work with, you're not making a mistake with any of them. Okay, now some products may be more appropriate for some others than, one group than another. But that being said, there's not a bad apple in the bunch. We're really, really blessed to have an industry that has such a great a host of companies that are really doing all the right things, okay? But first and foremost, I think you should own this product. Why do you not own it yourself? It's very hard to sit down with a customer and try to convince them that this is a product that they really need and it's well suited for their financial situation. It makes sense, but yet you don't own it. And I think in order to enhance your believability and your credibility, this is something you want to do, is own it. So first thing first, call your carrier, call your rep, and say, hey, listen, tell me how much I can buy and how much is this going to cost, because I need this stuff, okay? Talk to all your clients about protecting their income. There's no one that's been disenfranchised from the company, from disability income for the most part. Talk to everyone you know. Everybody you know, say, and the simple question you want to ask is, if you become sick or hurt tomorrow, I need to know what your plan is. So what is it? Okay? I know we talk about retirement planning. Say, well, what are your plans for retirement? What are your plans for this? Or how are you going to send your kids to school and all these other things? Where do you want to live? You're asking all these forward-thinking questions to your customer. Well, what if that all changed tomorrow and they couldn't work tomorrow? And go to work, because everything you're doing, all the planning you're doing for retirement, if they want to send their children to school, if they want to build wealth in their business, or whatever they want to do, it's really kind of interesting that we all sit back and say, oh, we're going to plan on doing all these really, really neat things for you and my customer. However, your customer is required to do one thing. And really just one basic fundamental thing is to give you money every month, or at least get up every day and go earn a paycheck. Okay, so if they're not earning a paycheck, all the planning in the world that you do really doesn't mean much. Okay, really, because you think about it, if their income stops because of a sickness or injury, the last thing they're going to be thinking about is how can I put more money into my retirement plan? That's really not going to. They're going to be worried about, how do I stay alive? How do I manage the pain? And how do I keep the wolves off my back while I don't have any money coming in to pay my house payment? And I don't want to send my kids back home, or tell my kids to come back home from college because I can't afford to send them there. That's not good. Okay, start with the need. They really do need this stuff, but help them identify it. Get a piece of paper out and say, listen, let's talk about if you do become sick or hurt tomorrow and your income stopped. Let's talk about where all the sources of income you have, where are they going to come from, how much are they going to be, and what's it going to be, and how long are they going to last? And ask a lot of questions. Ask the who, what, where, when, and why questions. It's very, very important. But to do this, you have to practice, just like anything else. If you're going to be a great athlete, you got to. They spend 5.5 days of practice in order to fulfill 60 minutes on a field, on a football field. So think in terms of, if you're not practicing this approach, call your people, call your home office, call your company rep and say, hey, listen, help me through this. Give me talking points, give me material, give me tools to help me and understand the need for income replacement. Keep it simple. Try to use as many visuals as you can. People don't want to sit there and read. And use language that they can understand. Sick or hurt, can't pay your bills. These are the type of things that people understand. And make it about them, not about the money, okay? And say, instead of saying, well, you need $5,000 of monthly income if you became sick or hurt. No, you really don't need $5,000 of money. What you need to do is have money available to pay your house payment, spend, maybe cover that tuition cost for your son or daughter that's out at the university. Maybe set aside money to pay your credit card bills or deductibles on your health insurance, or whatever. And keep in mind that if you do become sick or hurt, you still need health care, and you still need to pay your health insurance premium. I mean, there's a number of things that people just don't clearly understand the financial consequence to them if they become sick or hurt. Last thing they want to do is worry about money. Trust me, it's not a good situation. So most of your carriers have your back, and they're going to do everything, and they got a lot of tools out there to help you do that. So let's talk about establishing the need. Little income pays for the big things and the little things. We don't think in terms of, obviously we talk about the mortgage and we talk about the car payments, but what about those expenses like maybe sending your nieces and nephews birthday cards, or going to birthday celebrations or anniversaries or weddings, or all the little things that, they add up. I mean, it's not a lot of money, but boy, you just don't want to be a hermit. You don't want to sit alone. You don't want to keep from being part of that active life that you've built and being a part of everything you've been involved in. You still want to do those things and enjoy those celebrations. But the lack of money really will change your culture. And this is something your customers have to understand. It's the little things too that could really add up. So this is the next thing. This pyramid has been around since I think forever. Okay, I know when I started in the business in 1981, this is where I learned the fundamentals of income replacement. You see, what we all have is we insure our property, we insure our health, we insure our life, we insure our cars and our home, and then as we move and go through our careers, you know, we want to have a retirement plan, and we want to have investments, maybe some good savings accounts, and maybe just maybe own a business. And then as we pass through our lives and we get to a point where we want to start transferring this money to our children, and we transfer our wealth to our families, maybe you know, some type of charity, or passing a business on, or whatever, you know, all those things, that's the perfect scenario, and it's all gone really well. However, there's one thing that could come up that can destroy and knock this whole pyramid down, is the lack of income. If you can't get up every day and go to work, nothing above that golden line is going to work. You're not going to have the car to insure, the home to insure, the property, you know, your health insurance has got to be paid. You got to keep that life insurance going. Maybe you got waiver premium on life insurance, but why don't you have waiver premium on your car payment and your house payment and your credit card bills and your student loans? Why don't you think about that? Because all this other stuff we're doing, the retirement and personal investment and savings and maybe owning a business, is just not going to happen, okay, financially for your customer. So is this the way you want the story to end? We got to start thinking in terms of how do we, you know, cover the base. Make sure that everything's going to happen. Well, maybe not everything, but they're going to be able to live in dignity. They're going to be able to do the things they do, maybe continue paying the bills that they need to pay, and taking care of their health insurance premium, and not really become a financial burden to their family. Okay? So, you know, you always get objections. We all do. You know, I don't need it. I won't need it. I won't get disabled. Well, that's great. You know, I don't know most people who want to get disabled, but we all know somebody who's been sick or hurt. Okay, disabled. The term disabled, most people think of wheelchairs and handicapped parking spaces. Well, disabilities today in America really are not there. With us, on an average year, maybe 4 to 5% of all of our disability claims are coming from people who have had an accident. Those are the car accidents, you know, the falling out of a tree, falling off the roof, you know, getting involved in some type of injury of some sort. But the other 96 to 94% are coming from sickness. No one's immune from that. Anybody can have a heart disease or muscular skeletal disease, or, you know, cancer, something like this, or some type of issue with almost anything. Okay, it's not coming from accidents. Accidents, most people think in terms of, well, if I become sick or hurt, it's going to be because I fell out of a tree, so just don't get in a tree. Well, that's not the reality of the real world. Okay. So you might need this, okay? And share some claims history with people. So, you know, each company has some type of testimonials that they can share with you, or you may know of somebody, an aunt, an uncle, a brother, sister, you know, a relative, a neighbor, who maybe got sick or hurt and couldn't go to work for a while, and that would be a good example of that. Okay. Another one is, I can't afford it. It's not really worth it. Well, you know, there's a commercial in the marketplace today that says, you know, we insure the things we can't afford to lose. And so when you look at all the things you own today, and you put that up against a car maybe worth $35,000, maybe your home is worth $300,000 or $400,000, and then your income's worth $6 or $7 or $8 million, which one do you want to protect first? The car at 30-some odd thousand, maybe the home at 300,000, or your income that has a potential value, human life capital of $7 million. Now really think that through. Okay, what's the biggest asset your customer has? Is their ability to get up every day and go to work. Because if they don't go to work, they don't have the car, they don't have the home. It doesn't matter, okay? It really doesn't. So I think that's important for them to understand the value of their income. Most people don't put that value. They don't take their income, and most advisors don't do this either. We don't capitalize that income, put it on their balance sheet and say, hey, listen, you got an asset worth $7, $8, $9, $10 million here. Let's talk about protecting that too. Or they could say, hey, I have other coverage. I'm adequately protected. Well, that's true. That's a good starting point. But, you know, the common saying is, well, you've covered half your paycheck. What about the other half? Most people think that group long-term disability is is everything they're not going to need. Well, most times it's not permanent and portable. They can't take it with them. Most of the time, that benefit's going to be taxed as ordinary income. In the best case scenario, if it's a tax benefit where they're not paying the premium, they literally took a 40% hit in pay. 40% of their income dropped. Just in the best case scenario. That's the best case scenario, okay? So if you can live on 40% less of income, then all right. But if you can't, you got to have a conversation and say, listen, here's if you become sick or hurt, here's what you're going to get. Is that going to be enough? So you got two choices to make. Either you live off that 60% of your pre-disability earnings, or taking a 40% hit in comp, or you have to get rid of something. You got to get rid of some obligations. Let's call the kids and tell them they're not going to college, or let's take it from two cars to one car, or let's raise the deductible on our car insurance to $10,000 and see what happens. There are just so many things that they have to do. It's not because they want to do it; it's because they have to do it. Now, if they had income protection to cover that gap in their income, then you wouldn't have to have those conversations. They can live their life and keep on going the way they did before. And so that's important, that peace of mind that we can give. Help put your clients in the driver's seat. Income protection provides a backup plan when life doesn't go as expected. And the problem is, we don't know when it's going to happen. It could happen tomorrow. It could have already happened for your customers. Many times we get customers, we have people applying for disability coverage, come to find out, I'm sorry, that you crossed that line already. Okay, you've been diagnosed with this, or you've had this issue with you, and neither us or any other company is going to take you on as a risk. You just don't want to have that conversation with your customer. You want to do it while they're healthy, while they're young, while they're employed. And so it's important to understand the fundamentals of income replacement, that medical history and financial history is very, very important to them being able to purchase this. So there's no better time than right now to have this conversation with your customer and let them know how important it really, really is. 69% of Americans have less than $1,000 of savings in their savings account. If you ask most people, say, hey, listen, how long could you go in your savings? In today's world, if you just got $1,000 sitting around for an emergency fund, it's not going to take long to eat that up. Okay, and medical expenses are the leading cause for personal bankruptcy. We talk about personal bankruptcy, we talk about medical emergencies that cause bankruptcies in America today. The vast majority, 88% of bankruptcies in America that were a result of a medical emergency were people who had comprehensive health care coverage. So it's not the fact that they couldn't pay their health care coverage or pay their health care bills. The fact that when they got their money, they had to send it to their doctor, the pharmacist, they had to send it to everybody else, but they didn't get to use it for their personal living expenses. And really, when you think in terms of income replacement, it sounds like a lot of money, but it really isn't. When you consider that for a cup of coffee, less than a cup of coffee a day, you can pay at least around $3,000 of tax-free benefit for your customer that they can use to help offset the cost associated with them becoming sick or hurt, and then move from there. Everybody makes, we always go back to cup of coffee type of thing. We're just trying to make it simple. They're never going to give up their cup of coffee, but they'll be able to find a way, if it's important, and if you present it well and you present it correctly, they'll find the money. They really will. And so we talked about health care and health insurance. Disability income is considered a health insurance plan. And when you look on the left, health insurance, what does that do for a customer? Well, it pays their hospital bills, pays the doctor, medication, all the medical treatment, pays for the ambulance driver. Everybody's going to get a paycheck as a result of you becoming sick or hurt. Problem is on the right side, what about your family? Okay, health insurance will cover part of it, but what about your family? Who's going to put food on the table, clothing, housing? Pay the health insurance premium. Who are you saving for retirement, college education, and a lot more? Take a look at all the things that your income represents, and if you're not covering that, that's kind of a shame. If you're not having that conversation with your customer, shame on you. If you're going to be an advisor, be an advisor. But just don't be an advisor in something that you feel comfortable with, or you just want to talk about and taking $100,000 and moving it from pot A to pot B. That's really not creating wealth for anyone. Okay, you're not doing a lot for somebody. It's great they're going to get an extra basis point greater thing, or maybe a basis point less in fees. But what are you doing for your customer if you truly hold yourself out as a financial advisor? Then start doing some advising. and let them know that, hey, there's a big risk here that you become sick or hurt and lose your paycheck. Could it happen to everybody? No, I don't know. But 18.5% of the American population is considered disabled. Now, that's a lot of people, okay? And that's a ton. That's about 1 out of every 5 Americans are disabled in some way or another. So could it happen to your customer? Probably not. Maybe. Who knows? Okay? But what if it did? I mean, there's a 1 in 5 chance it's going to happen to them. So really think in terms of this and do your advising and do it properly. Okay? The need is there. What we could do is we could 43% say they would feel the financial impact of death. Obviously, that's uncommon. Okay, within 6 months. But 61% of Americans say people need disability insurance, yet only 26% of it have it. Why is that? You know, when we talk to consumers, they say, yeah, we need this. This is important. Once we tell them how it works and take the complicity out of it, and we tell them here's what would happen if you became sick or hurt with an income replacement policy, 61% of Americans say, yeah, this is something I want. How come only 26% of them have it? You know why? Because you and I and advisors in the marketplace today, we're not out there sitting down with their customers and just asking that simple question, hey, Bob, if you became sick or hurt today and you couldn't go to work, what's your plan? What are we going to do? I mean, where are we going to go from here? Okay, we have to have this conversation, because without this conversation, if you call me and say, or your spouse calls me and says, hey, hey, Mary got sick last night. We don't know if she's going to be able to work. Doctor says it's going to be a long-term thing. Hey, Mr. or Mrs. Advisor, what did you do for us? Tell me about the plan that you put together for us in case of this very big problem that we have. You got to have a really good answer for them. You can't say, well, I didn't think about it, or I really don't understand the product, or I didn't want to mess up my 401k sale. Well, that's not a good excuse. Okay. You got to be prepared to have that conversation with your customer, and in order to cover that, just have the darn conversation. Talk to them about it. Okay. And life insurance and disability go hand in hand. Life insurance provides that tax-free benefit that if your customer dies, that you've created a pool of money, a large amount of wealth for that family in order to live off that money and provide continuation of income. Well, income replacement or disability income does the same thing. It's a living benefit. Okay, life insurance, you got to die in for that one to work, for most part early on in the years. And that's why, and I'm a big believer in life insurance. It's a big part of my retirement plan. But if you were to die, or if you were to become sick or hurt, I need something to pay those expenses today. I'm not gone. I didn't die, but I just don't want to have a front row seat at the demise of my family and watch them suffer and lose everything. And there's a lot to lose if you don't have an income and your ability to work. You lose your self-esteem. You lose your identity, and you can lose your family. Your spouse can leave you. Your children could just kind of walk away and not have anything to do with you. Your family. I could tell you horror stories about people who didn't check that box and purchase income replacement. It's a sad, sad story today. But let's talk about what's in the marketplace today. Obviously, we're going to focus on 3 of the contracts that are out there. Not focus, but kind of tell you that the ones that really generate a lot of discussion. Individual disability is probably the most important. This is the hallmark of most of your carriers, and this is what they hang their hat on. It covers income in the event of a disability. Real simple. Helps them maintain a current lifestyle, continue saving for retirement, for their dreams, and provides for them and their family if they became sick or hurt. This is the hallmark of our industry, is that individual disability income product. But there's other ones out there, too, that you can start a conversation with. If you're talking to a small business owner, if that business owner were to become sick or hurt, he or she may have 2 or 3 employees. They've got rent at the office, and they got the mortgage at home. Well, the mortgage at home, we'll cover that with individual disability, but what about the rent at the office and the insurance and the 401k contributions and the health insurance premium of their employees? These people who work for that person really are relying on that individual's ability to get up every day and come to work and generate revenue, create billable hours. And if that person's not there to do that, then everybody suffers. Now, you've got your family at home, but you got your family at work. Okay, these are people like your family. If you can't pay their bills and help them pay their bills, they're going to suffer too. So overhead expenses are a great product. It's a reimbursement type of contract. where basically that business, albeit it's not open, can create revenue to help pay all their expenses, including the most important part of that business is their employees. So it's a great opportunity. Talk to your company representative about overhead expenses. And the other one is disability buyout. Many times we're talking about business continuation with customers all the time. What happens if you died? Who's going to be the succession? Where's your succession plan in your business? Well, unfortunately, they never take into account within that written agreement that they have, that buy-sell agreement, there's a provision for a disability, that they become sick or hurt, but it's unfunded most generally. So this is a great opportunity. Everybody's talking about 401ks, everybody's talking about health insurance, but when you go into a business and you talk about, hey, let's talk about funding your buy-sell agreement properly. Let's make sure that buy-sell agreement is compliant with what the terms and agreement are that you have with your partners. Okay, because you've got a lot of unfunded obligations in there that maybe we should have a conversation about. So it's something great to talk about. Then later on, if you want to talk about the health insurance or the 401k, great. But you're in the door. You're talking about something that no one else is talking about, and it's giving you a foot up against the competition. Okay, underwriting a disability. This is the part that I find most, I've been doing this since 1981, and this is the one thing that I find interesting with most advisors, that they think that the underwriting for disability income is complicated, time-consuming, and it's very hard to get. Today, there's nothing to that. It totally couldn't be further away from the truth. Disability income is so advanced today that we're able to take a case today and where you write an application today, and by Monday, we can have an answer for you and a policy in the stages of delivering to you in 48 hours. I mean, it's a remarkable thing that we're doing in the income replacement marketplace today. With modern technology and advancement in the medical world, we're able to do things that, 20 years ago they would have never thought possible. However, it's going to take your involvement to be a partner with the carrier. Number one, pre-screen your client. Don't send in an application just to say, well, let's see what the company will do. That's a very bad strategy. I would complete what's called an inquiry, or do information and get information from your customer. If there's a red flag, a back issue or a medical issue, that maybe cancer or heart disease, or maybe something dealing with mental stress, anxiety, something like this, let that underwriter know up front before you take that application. If it's something that they feel that's non-insurable, they'll let you know. Or if it is something they can insure, but it may require maybe something like a limited benefit of 5 years, or maybe a rating of some type, or height and weight because it's out of line with the company standards, then what you can do is you can go back to your customer and say, hey, listen, I found a market for you. It's going to cost you X money. You don't have to get into the rating. It's going to cost you 50% more. No, this is what it's going to cost you, and you're going to be able to get this benefit for 5 years. What you want to do is manage your customer's expectation. You never want to go in there and say, hey, it's going to cost $1, and they're going to give you this for the rest of your, to age 65, and it comes back $1.50, and they're only going to do it for 5 years. Then show them the $1.50 for 5-year benefit. That way you can manage to their expectation. You don't have to follow through and have to, keep on explaining and going back to your customer and saying, well, they did this, they did that. If you know up front, it's going to make that process a lot easier. You don't need to go to the customer and say, hey, listen, they're charging 150%. So say it's $1.50. That's easy, okay? And this is what it's going to be. Complete the application fully. Understand your client's motivation. Try to find, why are you buying? Why would they be buying this? If you get a call from a customer, say, listen, I'm thinking about buying disability income coverage and I need it now. Well, I think there's a couple red flags that would go up, in my opinion. I'm just saying. But be honest and open with the underwriter, and be prepared to answer questions. Understand that your customer is going to be underwritten based on 3 criteria: their occupation and duties, their medical history, and their financial status, their income. And those are things that all have to be validated, okay? And the occupation, don't tell me what you do, don't tell me what you are, but tell me what you do, okay? When you say you're the president of the company, that really doesn't tell me much, okay? Doesn't tell me anything, okay? But what does it mean to be the president of the company? What do you do every day? And how do you work? And how do you generate income? And how, tell me all the factors involved in your day-to-day activities. Those are the important things that we want to know, okay? But let's talk about growing your business. Producers who sold at least one disability policy during their first year are more likely to sell DI later in their career. And producers that take a comprehensive approach. When I talk about comprehensive, folks, I'm talking about not just talking about focusing, narrowing down on that pool of money they have in the bank or in a CD or in an IRA rollover. and offering disability income earn 59% more than those that do not. These are facts, ladies and gentlemen. This is stuff that is real. Okay, I know that I can go to any company that I work with, in particular, like for instance, the company I'm with today, and I can go to that company and look at the top board of the top producers, those people who are at the top level of total compensation from the company, and I can identify and validate that people in that 5 or 10% of the company are the people who are writing a substantial amount of income replacement. And it's no secret. The reason they're doing that is because they're taking a holistic approach to everything they do, and that makes them a trusted advisor with their customer. That way they don't have to go to 15 different advisors for 15 different products. Just have that conversation with your customer each and every day, okay? It's a great door opener. Helps the clients pay their daily living expenses. We think that's important. Diversifying your product offering and provide attractive compensation. The compensation for income replacement, in my opinion, is the best, most highly compensated product in the marketplace today. And it should be part of your due diligence. This is something you owe it to your customers. Be fair, be honest, and do the right thing, okay? And it is a sought-after market, and there's markets that are better than others. But find your niche, get to understand how they operate. Have your underwriters and your marketing reps help you through the process. Create some type of marketing pieces and go after it. It's a terrific market and a terrific opportunity for you to do all the right things in our business. So who's a good prospect for disability income protection? Well, anybody making an income, anybody working 30 hours a week, making money, and that money is used to pay for their living expenses. That's your customer. Those are the people that need this, okay? Typically, under age 50, 55 is a target market. Anybody 18 to 55 or 18 to 50, we're not looking at 65-year-olds or 70-year-olds for this product. We're looking at people that rely on their income because, what's the most important thing they have is their ability to get up every day and earn an income, and that's very, very important. So, what are the things that customers want to know? We've made this so complicated. I think that, I get kind of amazed at the questions I get from customers. But really, we've really boiled this down to your customers really want to know 4 things: when do I get my money? If I became sick or hurt today, when do I get my money? Well, that's the elimination period. Okay, great. And if I do become sick or hurt and I satisfy that waiting period, how long will you pay me? That's your benefit period. Okay, great. If I went 90 days and you're going to pay me to age 65, how much am I going to be able to get? And that's going to be the amount that we're going to be able to give you based on the issue and participation limit. And the last thing they want to know is, okay, I got to wait 90 days. You'll pay me to age 65, and you're going to pay me $5,000 a month. What's this going to cost me? It's going to cost you $120 a month. Okay, that's what they want to know. Don't make it hard. Don't make it complicated. Don't get too wrapped up in definitions. I mean, if you get a customer who does that, then call on your marketing rep to have a conversation with your customer. Every one of them are willing and able to do that. If they want to get in the weeds, that's great. I can get in the weeds with anybody. But you don't really want to boil it down to when are you going to pay me, how much are you going to pay me, how long are you going to pay me, and what's it going to cost me to get it? I mean, it's not complicated. It's really easy stuff. Okay? So where do you go from here? Like I said before, I think the first and foremost thing you do is you buy it on yourself. Second thing you do is you make it a habit every day with every customer. Maybe put a reminder in your files. Hey, ask them if they became sick or hurt today, what are they going to do? What's the plan? Because that's important, because the one thing you're doing for them is really requires them to get up every day and go to work. If they can't go to work, then everything you're doing for them really doesn't mean much, okay? And just make it a common practice in what you do in each and every day. If you have any questions, I appreciate your willingness to listen to this and take it to heart. I have a passion for income replacement. I think it's very, very important. The carriers that we have in our marketplace today, like I said, we're blessed to have some great carriers. So it's a good market. It's a great market. It's a great way to, if you're young in the business, create a good habit of asking everyone you know. And if you're aged, if you're getting older in the business and maybe you don't want to really do this, give it to another person. Find a young advisor. Say, hey, listen, I want you to handle all my risk products. What's wrong with that? It's not about you. It's about your customers. And giving your customers an opportunity to satisfy and take care of a need that they have, a financial need that they have that they really can't overcome themselves. you can't self-insure this stuff. And so it's important that they understand that, if I can't do it for you, I've got a young new agent, young new advisor that works with me and works for me that's going to be able to do, or partner, or split the cases, or go in as a team, or do something. But just don't let it go because you don't want to bother with it. That just doesn't fly. Okay? Be in the business, stay in the business, and do the right thing. So with that, I want to thank NAIFA for giving me this opportunity to share this message, and for all of you who have taken the time to view it. And I wish you all have a great week.
Thank you, Rick, so much. Really appreciate your time and your presentation and your wisdom. Really appreciate it.
Thanks.
Hope everybody has a great rest of their week.
Thank you very much.
And if you missed any recordings from the last couple weeks, please let me know. Reach out to me at recruitment@naifa.org, or you can always call me at my number, which is 703-770-8223. Thank you so much, and thanks again, Rick.
You bet. Thanks.